I don't think there's a huge amount of long-term gain to be seen for global equity investors, at least. I mean, it is certainly true that reducing the power of China's big internet platforms is good for small businesses and for customers, but those guys aren't listed, so the benefits are going to accrue to the economy at large. The pain, I think, will still continue to be felt by the internet platforms. On the other hand, they're pretty cheap now.
They're pretty cheap now, and there is still growth. They may be compromised growth, but there is growth. And so, at some point in time, you would want to look at these names. I guess the insight that's required is when.
Yeah, exactly. I think that's absolutely right. So, I mean, in terms of equity market timing in general, I think we're moving into a pretty positive period. So we're likely to get a turn in the credit cycle whilst the US is now tightening. Base effects are pretty positive, growth is slowing, and we're seeing specific pain points for SMEs and for the property sector. That kind of reacceleration in the credit cycle has almost always been good for equity markets in China. And meanwhile, the air's coming out of the commodity price bubble. That liquidity is probably not heading into housing, particularly given the uncertainty around the new property tax. So there's really only one place for it to go, and that's the equity market.
For the property markets, a big concern in the contagion risk. Do you think it's been well flagged, and so nothing more to really rock investors on this front? Yes, you flagged the introduction of the property tax, but will we get incremental news from here? Nothing that's jarring or groundbreaking, so to speak.
There may certainly be more jarring news in the property sector, but the most important thing is that policymakers are signaling easing on that front, easing in developers' access to financing in particular. Shanghai Securities News reported yesterday that lending to the sector jumped pretty significantly in October. The aim is not to kind of reignite a property rebound, but to ensure that developers get the funds that they need to finish their ongoing projects so that households aren't on the hook for losses. And to lessen the near-term risks of a wave of defaults. So I think, structurally speaking, we're getting into a slightly safer period in this property cycle in terms of developer default, but there is every chance of upsets along the way.
Okay, Thomas, very quickly, I do want to get a perspective, and because the world is watching what the Fed has done, rather what the Fed did overnight yesterday and what the plan is going forward, tapering taking off. What does that really mean for investments coming into emerging markets, especially Chinese assets, which seem oversold right now? And we've seen how the currency, the Chinese yuan, has continued to move from one point of strength to another. So what is the overall outlook here?
Yeah, I think it's pretty positive. So back in 2020, after the kind of strong hiccup in January, February, Chinese markets outperformed the rest of the world pretty strongly as Chinese policymakers got ahead with supportive policies by about a 6-month lag. And then the economy came back faster. Then in 2021, we've seen basically that whole thing go into reverse as China was tightening and the rest of the world was loosening. I think 2022 is going to be the other way around again, that China's in an easing mode while the US has to tighten because inflation is such a problem.